because obviously, in the business acquisition world, there's also debt that's factored in. Now we've done all cash deals up to this point, but I wanted to just kind of hear your take on it. And I quote Warren Buffett a lot. He's a big
But
hero of
even in
mine.
the publicly traded realm, we were taught and still taught, bonds are debt.
Mm-hmm.
And so if you're looking at a company with publicly traded stock, it has a heavy bond weight.
Yeah.
You discount the P to E. You don't compare that stock apples to apples with a company that has no bond rate,
Right.
zero bonds. They have
Yeah.
zero debt. They don't have bank debt. They don't have short-term debt. They're sitting over there debt-free. You would give them some benefit on their stock analysis mathematically. We're taught to do that. But again, it does not transfer from the mutual fund world or the publicly traded world to the real estate world or the
Small business world.
small business, privately held business.
Yeah.
This is don't even. I mean, I know people that do have $1 billion top line, and honestly, they don't even look at. They just a lot of them just don't borrow money. They don't even know why they don't borrow money. They just don't borrow money because somebody told them to one time, and they go, "I like not being in debt. I can sleep better," and that's their entire analysis. Me, I've got analysis, and I can do the country boy thing too, and say I just sleep better. Bring on a pandemic. I got cash.
Yeah, I'll bring us home because I had and I could talk to you all day. And I appreciate you taking the time to talk to me and the audience of the game.
I've been honored. It's fun conversation.
If you had advice that you could, and I'll keep it specific to business advice, that you could give 40-year-old Dave, what would you tell him then that now that you didn't know then?
Play incremental long ball. Don't look for the home run. I keep waiting for somebody to call me and for this to get easy. One phone call and it's all over. And it's like, oh, now I don't have to think about it anymore. Someone else is going to do it for me. It's all automatic. It's never going to be automatic. It's never going to be easy. It's a hustle and grind. It's a claw. You're going to make a bazillion mistakes. Make mistakes that are experiments that you survive. You put out a hypothesis, you survive the experiment. To live another day to have another experiment. Put out another hypothesis, another product that fails, another idea that fails. And our failures at Ramsey are in number and in money are way greater than our successes. The only thing is we survived them. A, we didn't have debt, and B, we never bet the farm on one horse. And so from a diversification standpoint, we never pushed all the chips to the middle of the table on one hand. And so we're not looking for the singular home run.